So last night I managed to catch a beautiful 8.94 risk to reward trade on NQ. This was after the stock exchange open. I called it around 10 o'clock, so half an hour after New York Stock Exchange open. And in this video, I'm going to break down the exact strategy that I use for this trade, my exact entry, my stop loss, my take profit, and my alt analysis behind this trade. Let's have a look. So going on to the fifth, I'm going to actually replay price over here like this, like we're fresh onto the market, right? Going on to the 15-minute time frame. What did I see? I saw that we had this major high up over here, right? This high had very good significance because it caused this major move inside the market. It's broken structure here, and it's also caused this massive impulsive move that has filled this gap over here. Now, I knew there was a lot of liquidity sitting at this high that price wanted to sweep out before moving lower. So what did I do? When New York Stock Exchange opened, I marked out this high and I simply waited for price to come and sweep the high. Jumping onto the 3-minute time frame, price was approaching the high. Coming up over here, you can see that price is approaching the high slowly. And then price comes up. Now, as you can see on TradingView, it did not sweep the high. But on my broker, on MetaTrader 5, on both funded accounts, it swept the high. So I was more than happy to take a trade based on this. I waited for my 3-minute rejection candle because I always wait for a 3-minute rejection candle, especially of a 15-minute level. And then going down, let's look at our take profit area. Now, we've got all this area to target over here, but I simply wanted to target some internal liquidity over here. I did want to run it down to these lows over here, but since it was only Monday, I was more than happy to secure a win to start off the week. So yeah, that was my take profit. I also saw price swept out all this liquidity before it came up. I like when there's a nice area of liquidity, it's always best when there's a lot of volume coming up into the area of liquidity. Then when it sweeps, it usually causes a big move in the market, right? If we're approaching the area of liquidity and price is just messing around like this, and it just sits there sideways and slowly makes its way up, it's a bit less probability for me because I like to see a nice influx of volume into the high, a nice sweep and a nice rejection. Now, as you saw what I said, I waited for a 3-minute rejection candle. So once price took the high, I waited for the 3-minute to confirm. Then I entered the position with my stop loss covering the high. From there, I let price do his thing. As you guys can see, price ended up melting. At this point, when price took this low over here, I then moved my stop loss to break even. So this was a risk-free trade and I went to bed. And if you let price play itself out, it actually ended up taking both areas of liquidity. It took out this one, and then this morning in Asia session, it came out and took the major level of liquidity. But that's the exact trade and the exact trade breakdown. My exact strategy is very simple. I wait for a market structure break, so something like this, bang, break of structure. I look for the high or the low that's caused this structural break, because this is the break of structure, and this was the high that's caused the break, meaning it's a protected level of liquidity, and there's a lot of order sitting up here because these people shorted, and it caused a lot of volume inside the market, and it took out the lows. I then wait for price to come up and build up some liquidity. Once price sweeps up the liquidity and we take out the high, I wait for my rejection. From there, we enter and we target the level of liquidity. Exact same thing happened here. Price broke structure over here on the left, leaving a lot of liquidity up over here. Price comes up quite strongly after stock exchange open, sweeps out all this liquidity. We get our 3-minute rejection over here, and that's when I entered off the 3-minute rejection, stop loss at the high, targeting the lows. It was actually 8.9 risk to reward. I think I actually had a bit of a tighter stop loss just at the high, a bit of a bigger stop loss. But yeah, this is the exact trade. Nice and simple. 15-minute protected high, 15-minute break of structure, a nice sweep, rejection, enter off the rejection, target the 15-minute liquidity. Because if you look on the 15-minute, this area down over here caused this move inside the market. You can see price comes down, turn off the market, comes up, comes down, and this causes the impulsive move. So I know there's a lot of liquidity down here, and this could be a possible area of reversal. But I shorted, targeted this low, price slap, take profit, price slap, take profit, and as simple as that. 8.24 risk to reward taken live. That's my exact strategy. And if you want to learn more about what I do, fill out the waitlist form below because the new mentorship is opening up this week, and I'll be in contact with every single one of you while I teach you my exact strategy and everything that you need to learn about trading. Hope you enjoyed this video and stay tuned for the next one.